Last week, the RBA board met on the first Tuesday of the month to discuss the level of the cash rate. It was the first meeting chaired by the new RBA Governor, Philip Lowe, following the retirement last month of the long-serving Governor, Glenn Stevens. As expected, the board left the cash rate unchanged at 1.5%. So it appears that under Governor Lowe's stewardship, it's business as usual with no immediate change in direction. Although we have a low cash rate, the Australian fixed rate yields, as shown by the 3-year and 5-year swap, have moved up since September due to an unwinding of Australian rate cut expectations in the immediate future and due to the expectations of a rate rise in the US by this December. The US Federal Reserve appears split on the timing of a further US interest rate rise. Fed Chair Yellen and a number of Fed governors feel that the Federal Reserve should continue to be patient and cautious with monetary policy, while several regional Fed presidents believe that beginning to implement rate hikes would be a good thing for the US economy. US data was overall reasonable but kept falling short of the improvement generally expected by the markets. For instance, payrolls increased in August by only 151,000 against expectations of a rise of 180,000, and the unemployment rate was stable at 4.9% rather than dropping to 4.8%. And US inflation is still below the Federal Reserve target and has been so for the last 5 years. But when you compare some of this data to our friends in Europe or Japan, the US is not doing too badly after all. The Australian dollar against various currencies continues to be range-bound, captive to rising and then falling commodity prices. However, we expect financial markets to remain volatile until we get through the US presidential elections in early November. China stands to lose the most should there be a Trump victory, given that 3% of their GDP is linked to the USA, and Trump is threatening a 45% punitive tariff rate on all Chinese imports. This has the potential of slowing China's GDP growth from 6.7% towards 5.7%. We will have greater clarity after the 8th of November. Until next time, that's the market update from Bendigo Bank.